Well, it was a wonderful day for the markets. The Nifty ended above the 90,900 mark. The Bank Nifty came very close towards the 44,000 levels. But do you know the reason why the index today, after so many days of consolidation, managed to cross above the 90,900 mark? What was that different factor in the markets which led into this breakout of the 90,900 mark and a breakout of a major consolidation for the index? No, it was not the open interest, it was not the participation of large cap names. In fact, if you look at the day today, most of the large cap names like Reliance, HDFC Bank, ITC, etc., these stocks, and even ICICI Bank, these stocks were hovering closer to maybe 0.5% plus minus range. In fact, for most part of the day, many of these large cap stocks were actually trading in the negative territory. But there was this one factor which changed in the markets today, which I believe is a decisive change of factor, and that is India VIX. If you've seen the index today, the India VIX, I think in the fag end of the session today, managed to rise towards 12.4, 12.5 mark. Now there are two factors which have changed. One, of course, is that the India VIX has started to show signs of recovery or a rally. The second and the most important is India VIX is back above the 200 moving average, and it is also coming closer to a major breakout in terms of the short-term charts. Now there are two aspects which comes over here. One, of course, is if India VIX rallies, is it good for the markets? Second, historically, India VIX rallying may not be good enough for the markets because it tends to lead into a rise in volatility. Now the best way to try and explain this is that India VIX is generally broken into two different types. One is good volatility and the other is a not so good or maybe a bad volatility. Let me give you a very simple example. Now imagine if there are two batsmen who are batting on the crease and they are playing at a very slow run rate. Now typically what do you want? You want one of the batsmen to actually get out so that another one comes in who probably can take the run rate as well as the strike rate a lot more higher. Now that's what we call as good volatility. So a wicket may actually turn out to be a good, to try and up the strike rate or up the run rate a bit more. Now that's exactly what happens in the market. When the index gets into a tight range, you want that somehow the index comes out of that consolidation. Now if it's not with the support of large cap names, India VIX plays a role. Now in that aspect we call it as good volatility. The reason why I call it as good volatility is because it helps the index come out of a consolidation. If you've looked at the charts for India VIX, is what we witnessed in the end of September 2023, when the India VIX had come back above the 200 moving average. There was one single green candle which was quite bullish for India VIX. But the reason why this time around it could be different is because we are heading into an election results. So 3rd December, of course, is the outcome of the election results. That's on Sunday. We are building up to two important events. One, of course, is the monthly expiry for the November series this Thursday. And the second and the most important, of course, is the election results. So, which means that the rise in volatility, what we typically have seen today, may not be a one-off. Hopefully, in the next 2-3 days, that's leading towards the outcome of the election results, you may see a consistent rise. I'm not seeing a steep rise, but a very slow, gradual, consistent rise in the India VIX. And hopefully, that could play the catalyst which the markets require to break past about that boring consolidation typically on the Nifty. So watch out for India VIX trends as well as this very amazing aspect of India VIX, or rather the good volatility aspect of India VIX, where it helps the index to come out of consolidations.